Internal audit is a fundamental component of corporate governance, risk management, and internal control that provides independent assurance regarding the effectiveness of organizational processes and governance arrangements. Unlike external audit, which primarily focuses on providing an independent opinion on financial statements for external stakeholders, internal audit is established within the organization as an ongoing management support function designed to improve operations and strengthen governance. Within the program, internal audit is recognized as an essential mechanism for evaluating internal controls, identifying risks, promoting operational efficiency, and supporting the board and audit committee in fulfilling their governance responsibilities. The framework defines internal audit as an independent appraisal activity established within an organization as a service to that organization, emphasizing its advisory and assurance roles in enhancing organizational performance and safeguarding stakeholder interests. The principal purpose of internal audit is to provide independent and objective assurance that internal control systems, governance processes, and risk management arrangements are operating effectively. Internal auditors evaluate whether organizational policies and procedures are functioning as intended, whether assets are adequately protected, and whether management controls are sufficient to achieve organizational objectives. By identifying control weaknesses and recommending improvements, internal audit contributes to organizational accountability, operational effectiveness, and long-term value creation. Importantly, although internal auditors are employees of the organization, their independence from executive management is essential to ensure objective evaluation and unbiased reporting to the audit committee and board of directors. The program identifies several important functions of the internal audit department. One of its primary responsibilities is reviewing accounting and internal control systems, assessing whether financial reporting procedures and operational controls adequately safeguard organizational assets while ensuring compliance with established policies and governance requirements. Internal audit evaluates the design and effectiveness of internal controls, identifies weaknesses, and recommends corrective action to strengthen organizational resilience and reduce operational risk. Through this process, internal audit supports both management and the board in maintaining effective governance systems capable of responding to changing business conditions. Internal audit also performs an important role in examining financial and operating information to ensure its accuracy, reliability, and completeness. Management decisions increasingly depend upon high-quality information generated through organizational information systems, making independent verification essential for effective governance and strategic decision-making. Internal auditors therefore review management reports, financial records, operational data, and performance information to ensure that decision-makers receive accurate and timely information upon which to base strategic and operational decisions. Reliable information strengthens organizational accountability and supports informed resource allocation throughout the business. Another significant function involves reviewing the economy, efficiency, and effectiveness of organizational operations, often referred to as value-for-money auditing or operational auditing. Internal auditors assess whether organizational resources are being utilized economically, whether operational processes maximize productivity, and whether organizational objectives are achieved effectively. This broader operational perspective extends internal audit beyond financial control into performance improvement and strategic support, enabling management to identify opportunities for process redesign, cost reduction, and operational excellence while strengthening organizational competitiveness. The internal audit function also contributes significantly to risk management and fraud prevention. The framework identifies assisting with the identification of significant risks as a core internal audit responsibility, reflecting its important role within enterprise risk management. Internal auditors evaluate risk management processes, assess emerging organizational threats, and provide independent assurance regarding the adequacy of risk mitigation strategies. In addition, internal audit frequently undertakes special investigations into suspected fraud, corruption, or other irregularities where independent investigation is necessary to protect organizational assets and governance integrity. Internal audit also reviews compliance with laws, regulations, and internal policies, reducing the risk of legal sanctions, reputational damage, and governance failure. The need for an internal audit function varies according to organizational characteristics and risk exposure. The program identifies several factors affecting the need for internal audit. First, the scale, diversity, and complexity of company activities significantly increase governance risk and require stronger independent assurance over operational and financial controls. Large multinational organizations with diverse operations and multiple business units require sophisticated internal audit functions capable of evaluating complex governance and control systems across different geographical and operational environments. Additional factors include the number of employees, since larger workforces increase operational complexity and the likelihood of control failures or fraud, and the amount of change in information systems, as technological transformation introduces new operational and cybersecurity risks requiring specialized assurance. Organizations experiencing problems with internal control systems, changes in key organizational risks, or increases in unacceptable events such as fraud, regulatory breaches, operational failures, or health and safety incidents similarly require enhanced internal audit capability to strengthen governance and restore effective control. Finally, management must consider the cost-benefit of establishing an internal audit department, ensuring that the value generated through improved governance and risk management justifies the associated organizational investment.